Hey, Kyle here with winthehouseyoulove.com. Oh my gosh, this video has been requested so much. This is FHA 203k, everything that you need to know. So we're going to talk through FHA 203k loan requirements so you can get a better understanding of this rehab loan. This video is going to be a little bit long. Stick with me. There's going to be timestamps in the description. First of all, let's talk through an overview of FHA 203k. It's like an FHA loan, but it's for rehab properties, meaning that it needs a little bit of work to be done. So this loan is for fixer uppers, all right? If they need a little bit of work, if that house could be on HGTV and it could be flipped into a dream home, it's probably right for the 203k. So something that we need to know, there are two flavors of the 203ks, okay? Two different versions. There's the standard and then there's the limited. Okay, so let's first talk about standard. The standard doesn't have a loan limit. It just goes up to FHA's loan limit, which varies by county. Normally, this is going to hover in the mid $300,000 range. A limited 203k has a $35,000 maximum. Okay, so what are the differences? Standard is going to require a little bit more documentation. It's going to be a little bit longer of a process because you have a loan limit that can be a lot higher. It goes all the way up to around the mid 300,000 and higher if you're in a high purchase price area. Where a limited 203k is only going to allow you to have $35,000 as a max. So what we're mainly going to be talking about here is the standard 203k. That's what most people are going to go through. Unless you're familiar with 203ks, you probably won't be using or taking advantage of the limited as much because there's some restrictions to it. So credit score. Just like a normal FHA loan, if you have a 580 credit score and higher, you're going to be looking at a 3.5% down payment. So that's based off of the purchase price plus repairs. So if you have a purchase price of $100,000 and repairs of $50,000, you need 3.5% of $150,000 as your down payment. If you have a 580 score down to a 500 score, or I'm sorry, a 579 score down to a 500 score, you need to put 10% down. This is the exact same standard for regular FHA loan. So the benefit of the 203k is that you get to finance the home purchase plus the repairs all wrapped together in one loan. Normally, if somebody was looking at doing repairs on their own, they need to purchase the home and then finance repairs themselves, either with cash, home equity line, or some other personal funds. But with the 203k, you can say I want to purchase the property and get the repairs all wrapped into one loan, one payment, one closing. So why would we do this? Normally because you can't purchase a home that is in need of repair, right? Banks want to make sure that when they lend you money, the asset that they are securing that mortgage with, right? It's what's called the collateral of that loan. They want to make sure that if you ever go into default, that they can resell that property for a good value. So when you purchase a home, they don't want to see it to have a ton of repairs needed. So even on FHA loans, things like broken glass, chipping, paint, anything that's a tripping hazard, FHA will not let you lend money on a home like that. So a 203k allows you to get a home that is in need of a new kitchen, of a new bathroom, and new paint, removing all safety issues. A 203k allows you to purchase a home that might be foreclosed or needs work done to it. So what can you fix? So here's what you can fix with the 203k. Number one is hazards. So anything health and safety, FHA is wildly concerned about. They are so much about health and safety. So anything like, I put in, spelled broken windows wrong. Broken windows, broken windows, missing handrails, lead-based paint, mold. These all need to be taken care of with a 203k. Those are not optional. All right, these are things that are health and safety concerned by the FHA. Those have to be taken care of if you're doing a 203k. I think that kind of rhymed a little bit. Cosmetic is the next thing. So this is mainly why you'd be using a 203k. Obviously, you want to take care of health and safety stuff, but that's boring. What you really want to be doing is fixing up the cosmetic things. And this is where you can get a lot of value from a 203k. This is where you can do a flip because you can buy a home that's kind of ugly that no one wants to move into, live in it for a little bit, fix it up, add some cosmetic things like replace appliances, get a new bathroom, update countertops. Then sell the property in a year or two or maybe more for a higher value. All right, so let's continue on this list of repairs. I'm going to breeze through these repairs really quick, but you're welcome to pause this video and stay on here. So you have things like structural alterations and reconstruction, modernization and I'm spelling everything wrong in here, implementation to the home's function. And these are straight from FHA's guidelines. Elimination of health and safety hazards, changes that improve appearance and eliminate obsolescence. So this is something like 70s shag carpet and gross outdated cabinetry. Recondition or replacing plumbing, installing a well and or septic system, adding or replacing roofing gutters and downspouts, adding or replacing floors and floor treatments, major landscape work and site improvements, enhancing accessibility for a disabled person, and making energy conservation improvements. So you can see you can do a ton of stuff with the 203k standard. If you're looking at limited, you have to make sure that you're not working on any foundational issues, and normally things like plumbing can't be fixed on a limited FHA 203k. That's why on a standard one, you're going to have a lot more freedom to do what you want. You're going to have a higher loan amount and more flexibility with what you want to fix. So now let's talk a little bit about the work to be done. How does it get decided how much money you get to use? You don't just get to go to the lender and say, I want to purchase the property, and then I want to spend this much money, and then they give you a pile of cash. It just does not work that way. We're dealing with banks. We're dealing with lenders. They have restrictions and guidelines, and they're going to check the work along the way. So they have a formula for how you get to decide how much money is going to be put into the values. So here's how they've decided how much you can borrow. You can borrow either up to 110% of the property's future value. Okay, this is going to be determined by an appraiser, not by you, by an appraiser. So if the appraiser says this home is going to be worth $200,000, you bought it for $100,000, you put $50,000 in repairs, and they say after that it's going to be worth $100,000, let's say $200,000. They'll let you borrow 110%, which is $220,000. So that's the max that you can borrow. Or purchase price plus repair costs, whichever is less. All right. So it really comes down to the whichever is less. So that example I just gave, the 110%. If you said $100,000 purchase price, $50,000 of repairs, you can't say, oh, well, 110% of our future value is $220,000, so I'm going to add in more repairs. They won't let you do that. You have to put in your repairs first. And then if it's lower than that, they're going to take the lower amount. So in this example, they would use $150,000 as the max value that you would draw a loan from. Okay. Also, this is entirely required. Everybody I talk to that does a 203k wants to do the work themselves. They think that the bank's going to give them $30,000 and they get to play with it. It just does not work that way. It has to be a licensed contractor with full-time business that's insured. So you might be able to get away with doing the work here on your own if you can prove that you are a licensed contractor and you have a full business as a contractor. But if you just do contracting work on the side, even if you have a license, it's going to be difficult to have a lender allow you to do the work on your own because FHA guidelines say only 10% of the work can be sweat equity. So what ends up happening with the 203k is you're going to have to partner with a contractor. And you're going to tell the contractor, hey, this is exactly what we want to do. Your contractor is then going to submit bids to you and to your lender, and they need to itemize every single thing that you want fixed. And the lender is going to be the one to approve or deny those repairs and help you calculate how much your total loan is going to be. So the contractor is going to make accurate bids for the work and sends it to the appraiser for the projected value. The contractor and the appraiser are going to work together to figure out this here, which is what's the after repair value, and then how much of a maximum loan can you borrow from. So here are some expectations. First of all, I have to be completely honest. FHA 203ks are a bit of a nightmare. They sound great on a YouTube video, right? Because if you look up 203k videos, you're going to see people talking about how, no money down, go and flip a home and make $50,000 tomorrow. All these crazy promises that just don't really work out in the real world. They are long and they are complex. So if you're looking at closing this, I would expect 60 to 90 days to close this loan. Normally a loan could close in 20 to 30 days, maybe 45 days. Expect 60 to 90 days for this loan to close. Write out your contract. Have your realtor write out a contract for 60 to 90 days. They're just long. They involve a lot of paperwork. And the lenders that do 203Ks normally are a little bit slower. The lenders that are fast and get things done quickly normally do that because they work on very clean loans. They don't work on rehab loans. Rehab loans just take time because you're going to be going back and forth with a contractor and bids and an appraiser and the lender, and you all need to be working together to get on the same page of what's happening with the loan. Not only that, but you have to go through the regular loan process. You're going to have to work with your lender to talk about quotes, send in documents, make sure that you go through underwriting and get approved. Okay, work must begin within 30 days of closing. Okay, that's a requirement that you have there. And then the work must be completed and re-inspected within 6 months. So you have your licensed contractor at least, or at most 30 days after the loan closes, they need to start the work and complete it within 6 months. And the lender is going to have an inspector come out and make sure the work got completed. Okay, they need to make sure that this money that they gave to a contractor actually got finished and actually got done properly. Okay. Also, you need to expect that rates are going to be higher than a traditional FHA loan. I would expect anywhere from 1 to 2 percentage points higher. So if on an FHA loan, you're getting a normal, let's say 4%, I would expect on a 203K, you're probably going to be looking closer to a 5.5%. Now that's not all bad, right? You got money to rehab a property. That's a pretty good rate for what you're using it for. And most of the time, what you're going to do with a 203K is you're going to refinance out of it into something like an FHA Streamline or a conventional loan in the future, right? You just use the 203K as a rehab loan, kind of short term. The 203K is more like a bridge than it is a 30-year loan. If you have a 203K loan for 30 years, you probably need to readjust your strategy. You're gonna have a 203K, let the value kind of season in, meaning stay in the property for a year or two, then refinance into something like a conventional loan, or you might well just sell the property and make cash off of it. So here are some alternatives. Fannie Mae and Freddie Mac have their own rehab programs. One's called Home Style, but you could also use something like a cash out or a HELOC. This is only if you currently own a home. So let's say you own a home right now, you could pull out equity from your home to use as repair costs on an investment property. That's absolutely something that you could do. Something else to keep in mind is the 203K is a home that you need to live in. It's not something that you can use as an investment property necessarily. You actually have to move into the property after repairs are completed. And then like with most FHA loans, you want to stay in there for about a year if you are going to rent it out. So stay in there for a year to make sure you don't commit occupancy fraud, and then you can rent it out and use it as an investment. So here's an example. And I pulled this from a website online. I can't remember which one. But for instance, a house potentially worth $250,000 may sell for just $200,000 when it only needs $20,000 in repairs. So that leaves $30,000 in potential equity for a buyer with the initiative and drive to manage the fixes. And I think it really comes down to these two things, initiative and drive. It's a great point to bring up when we're talking about 203Ks. They're going to take work. They're going to be stressful. If this is your first home purchase, maybe you want to do a lot of research before you go into it. Get a lot of advice. Make sure you're walking through everything as diligently as possible. Because when people see homes on the market that are in disrepair, most of the time they don't want to purchase them. The only people purchasing them are people who have cash or people who are doing rehab loans most of the time. Most people want move-in ready homes. So if you're willing to put up with the struggle that comes with a fixer-upper, then great, a 203K might be great for you. And it's probably going to be an advantage if you have some home repair or contractor background. If you're just a handy person, then you won't necessarily be able to do the work, but you'll understand what's going on. And after some of those bigger repairs are done, you can still do a little bit of minor work on the home after the loan closes. So to wrap it all up, let's talk about the flow of the process because it can be a little confusing. So here's 8 steps to close on a 203K. So first thing is we're going to apply. You're going to apply with a lender, and a lender that does 203K loans. Make sure you check that up front. Not all lenders do 203K loans. After you've applied and got pre-qualified, you want to get under contract. So you're talking with a realtor, you found a home that you like that you want to do a 203k on, and then you get under contract for that home. After that, you're going to find a contractor. So call around, interview some contractors, and then find ones who could help you with a 203k. It's going to be bonus points if they've done 203ks before because they're familiar with the process. After that, talk with your contractor about what work you want done, and then get bids, itemized bids for every single thing in there. What walls are getting painted? What's happening to the kitchen? What's happening to the bathrooms? What's getting done outside? What not gardening work, what landscaping work is happening? You need to get that bid itemized, broken down, and detailed, sent to the lender and the appraiser. Next, you want to finalize the loan processing. So your lender's going to reach out and say, hey, we need things like pay stubs, W-2s, tax returns, your driver's license, bank statements. They're going to need all that stuff to process your loan like a normal FHA loan. After that, the loan's going to close. The contractor is going to complete repairs, and then you can finally move in. So you can probably tell 203ks are a bit involved. You want to work with a lender who's experienced with 203ks so you can navigate the process well. Overall, they're not a terrible loan, but they just take work. They're not going to be this golden dream that you're going to see a lot of people pitch because it's super fun to talk about 203ks and all the potential of making money, but it does take work, and you need to know that going in. You need to know what is happening. Don't let this be the only 203k video you watch. Go read on it, talk to lenders, talk to realtors, talk to contractors, get their opinion on what's going to work best, and then come up with a game plan that works for you and your family moving forward. So if you want to learn more about FHA loan requirements, where we talk about assets, credit, employment, all of the things to qualify for an FHA loan, go ahead and click this video over here. It's going to detail everything you need to know so that you can get this 203k loan ready to go.